Here we go. We get live, everybody. What's up, everybody? My name is Brad. Welcome to the chaos. The stock market is crazy and chaotic. I made it my mission to help you guys own it. Another crazy and wild day. Today is Monday, May 16th, 2022. I'm looking at the stock market right now, and it is just red, green, all over again. The same thing that we saw last week is repeating itself this week. I got the S&P that's down around a third of a percent. The Dow's up around 1.16. La-di-da. It's up 52 whole points. The Nasdaq's down 150 points. That's notable. It's down 1.25%. I'm looking at WTI crude right now, and it is still creeping up. That's the only thing that really hasn't been all that choppy, just going up in a straight line today. That is up 3%. Not good for those of you guys who are, looking to spend a little extra on gas, or maybe you weren't. So oil's going back up as we expected it would. But before we get into anything, guys, as always, I want to welcome our starting five. Jeponica, Housekeeping, Tiger's Edge. We also got Savvy Money Show and Prabhu. You guys are our starting five. If you guys missed the starting five, it could be because you're not subscribed or hitting that notification bell in underneath the subscribe button. So, guys, if you guys could hit that, I certainly would appreciate it. It helps support the channel as I go live at 3:45 p.m. Eastern time every single day of the week. That's a lie. Monday through Thursday, I go live at 3:45 p.m. Eastern time to cover anything that's going on in the market, as well as earnings if we have them. And today we do. We got Take-Two Interactive. We have Tencent Music and Entertainment. We also have Sundial, which I noticed on Yahoo Finance was like the number one search ticker in on the platform. Also looking at it, and it's up like 22% right now. Very interesting. I'm going to give you my thoughts on Sundial here in a second. But just kind of want to see what you guys are up to as well. As you're coming in, if you wouldn't mind hitting that thumbs up button, I certainly would appreciate it. I see that Alan Roth likes Take-Two today. We'll certainly be covering that as well. Savvy Money Show says Sri Lanka is out of gas. That's crazy. Absolutely wild. All right. So speaking of oil, as I'd mentioned to you before, oil is up $113 a barrel. It's up another 3% today. And this kind of reminds me of something that I talked about on our watch list. So if you guys aren't a part of this, you can check out the join button next to subscribe, or the link is in the chat above as well. But I was talking about energy last week within our chaos crew. And those of you who get the daily watch list were privy to this information. And that has everything to do with Marathon Oil. If you guys haven't checked out Marathon Oil, then you probably aren't a part of the chaos crew, to be honest. But looking at this, you can see the crazy move that it had. So on May 10th, actually, was it May 10th? May 11th? Let me double check. It was May 10th, yeah. So the May 10th list, first of all, Marathon has been something that I've been calling out that's gone up ever since, about 150% since I have called this out. And that was in the chaos crew way back when. But I brought this to everybody's attention when it came down and touched this the support here on May 10th. So just to kind of give you guys a little snapshot of what I was talking about with Marathon Oil in the watch list. If you weren't privy to this, I said Marathon, along with all other energy, was among the worst performers yesterday on the news that Saudi Arabia was indicating that they will work to lower the price of gas, which is a bit of a shift from what they have been communicating up to this point. And I said, don't expect this to bring too much relief at the pump. I still don't think it will do anything to the price of oil longer term. And I do think that Marathon is at a level which is attractive. And I made mention of this $24 per share support. It's tried and true. Literally, I mean, before that, it was a really tough resistance, and had hit this as support now, going back to March, and then again, beginning of April, then towards the end of April, and then again on May 10th. So I brought this to everybody's attention, around $24 a share. Obviously, you can see that it's at 28 and hit highs of even higher than that. 28, 27 was the high of the day. So this is just one nice little nugget here that our chaos crew was able to receive via the watch list. If you guys aren't part of it, then I highly encourage you to check it out. Every morning, I put up a watch list of 5 stocks that I think are worth taking a look at. Marathon, obviously, one of them, a really big winner there. Don't always get it right all the time, and I'll be the first one to tell you that, but we get it right more times than we get it wrong. And I give a fundamental breakdown of each of those 5 stocks, as well as technical analysis before the market opens to give you an idea of where to look in the market. If you have trouble finding whatever to look for, then I encourage you to check out the Chaos Crew. There's also the Discord group as well. Jeff Panicka, who's in the chat right now, is in the Chaos Crew. It is very chatty in the Discord, which I appreciate. Lots of engagement in there. So if you guys want to check that out, would love to have you guys as a part of the crew. All right. So as I'd mentioned, I've been trying to come up with different ideas, and I will be having the over-under segment towards the end. So make sure that if you want me to evaluate whether or not your favorite stock is overvalued or undervalued, make sure you put over-under in the chat and then your favorite ticker next to that over-under text. And your stock might show up at the end of the show. So over/under your favorite ticker, and I will determine whether or not your stock is overvalued or undervalued, of course, based off of my opinion. Now, though, I think in the beginning of the show, before we get into some of the earnings, maybe whatever is going on, I just want to do like a headlines segment. So today's headlines, first one is, and really the only one that I think is worth covering. We can cover the other one, which maybe some of you guys are interested or not, and we can talk about it if you want. But really, the big headline here is Elon Musk. And as you can see in the poll, I put in whether or not you guys thought that this Twitter deal is actually going to go through. Surprisingly, it's also split down the middle. Yesterday's poll was split down the middle. There's about 47 of you guys that voted already. The split's 51-49 as now I'm talking. Some of half of you guys think that the Twitter deal is not going to go through, and half of you think that it is. My opinions on this, I think, are that it's still going to go through. This to me just kind of seems like Elon Musk type games, and the only reason that I'd see that I could see that it wouldn't go through is because if the SEC or the law happened to step in the way. So if you guys didn't catch some of the drama that was going on over the weekend, Elon Musk came up with actually a pinned tweet. Let me show it to you guys. So let's check out this pinned tweet here. Let me pull that up. I thought this was very interesting. So here's Elon Musk. He actually pinned this. I don't know. It's been a long time since I've seen him pin a tweet. He does it every now and then. Very important fix for your Twitter feed. It says tap the home button, tap stars on the upper right of the screen, select latest tweets. It says you are being manipulated by the algorithm in ways you don't realize. Easy to switch back and forth to see the difference. I actually did this myself. And to be honest with you, I ended up kind of not really seeing a whole big of a difference between the latest tweets and the tweets that I'd want to see based off of the algorithm. Basically because you're expecting the latest tweets to come through, and some of them did, but some of them didn't, which I also thought was kind of buggy. But then he said, not to mention potential bugs in the code. Open source is the way to go. Solve both trust and efficacy. And he ended up going even further on this. I'm not suggesting malice in the algorithm, but rather that this is trying to guess what you might want to read, and in doing so, inadvertently manipulate, amplify your viewpoints without you realizing this is happening. I find this interesting because, the NDA lawyers from Twitter have been reaching out to Elon, and he actually put this on Twitter as well, was very public about it, about how they're reaching out to him, basically asking him, what the fuck are you doing? Stop saying this shit. You're not supposed to be talking about this. This is part of the NDA. And Elon's like, I don't know what you're talking about. This has nothing to do with the NDA. And it really kind of jeopardizing the deal here. He goes further to actually comment on current CEO Parag Agrawal's tweets regarding spam, and he says, let's talk about spam, and let's do so with the benefit of data, facts, and context. And he says, unfortunately, we don't believe this specific estimation can be formed externally. This is a whole thread. It was like a 15 tweet thread. It says can be performed externally given the critical need to use both public and private information which we can't share. Externally, it's not even possible to know which accounts are counted as monthly DAUs on any given day. And Elon Musk simply replied with a shit emoji. I mean, that's pretty crazy. And then he said each human review based on Twitter rules that can define spam and platform manipulation and uses both public and private data, for example, IP address, yada, 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 to make a determination on each account. And then he said, have you tried just going, like, it's clear that Parag is going to be CEO no longer, and he's probably not going to be a part of the company, which is pretty wild to think about, just based off of some of the comments that Elon Musk is making here. And part of me is kind of like, man, this kind of feels a little unfair on Parag because he's barely been a CEO for 5 months. But I imagine, and I don't know how long he's been with the company. It's probably been a long time. He had to have been with the company for a long time to just kind of be thrown in that CEO seat. I don't know. This is what the biggest takeaway for me was, and I don't think anybody's actually talking about this. But he says externally, just to kind of repeat the tweet here from Parag Agrawal. It says externally, it's not even possible to know which accounts are counted as DAUs on any given day. That's daily active users. So the way that I'm interpreting this, and you guys can tell me if I'm crazy or not, but the way that I'm interpreting this is that there is a significant misinterpretation or misrepresentation of daily active users on any given day. So you mean to tell me that investors buy and sell your stock, and this goes for all social media platforms, by the way, they buy and sell your stock based off of these daily active users. Remember, we've seen this before. Snap, Facebook, Pinterest, they all go up and down. And we could go as far as Netflix as well. They all go up and down, not because of the profit that they're bringing in or the free cash flow for that matter. I mean, let's look at Facebook that's trading at 14 times next year's earnings and has ridiculous cash flow, positive cash flow. And they go up and down based off of these daily and monthly active users. And we have no idea how accurate those monthly and daily active users actually are. Parag actually told us right in this tweet, fully admitted it. Yet somehow investors, hedge funds, buy and sell these stocks off of their earnings based off of monthly and daily active users to determine growth. And look, this isn't news, but the fact of the matter is that Parag's just coming out here and being blatant with it. And nobody's actually really discussing that or talking about that. And I don't know. I just think that I don't even know what exactly the true point of it is. I just felt as if that was a highlight that not a lot of people were really paying attention to. My thoughts are, I guess, that it's just crazy to think that people buy and sell these stocks, especially in the social media space, based off of daily active users when it's all bullshit at the end of the day. What really should be mattering, and I've talked about this, is that free cash flow, monthly free cash flow. Are they profitable? Are they actually growing in revenue? Those are the numbers that actually matter, not daily active users. That's such a skewed number, and it's ridiculous. I guess maybe that is my point. But let me know what you guys think about this, because to me that's so crazy. It's so crazy to think that I don't know. That's what people buy and sell the stock off of, is daily active users, and the CEO himself is coming out and basically saying there's a lot of daily active bots on here that we can't actually account for. And he even went as far to say that we delete 500,000 of them a day. Crazy times, guys. Crazy times. All right. At the end of the day, the question to you is this deal between Elon Musk and Twitter actually going to go through? I still think it does. And maybe we can get some clarity, if Elon does, on what actually daily active users means, and are they actually true daily active users, or are they mostly bots? Definitely want to continue to get your thoughts on this. This is obviously still going to go. I'm going to continue to cover this. So Bodie Beard says, I heard that the bot test sample size was 100 accounts. Yes, because that is what Twitter actually uses. That's their sample size, according to Elon Musk and various other sources. And this is how Elon was able to determine the amount of bots that were on the platform with this same type of strategy. So yes, that is also true. But okay. There you have it. Those are my thoughts on this. We're getting ready to come to the close here, and we do have some earnings to discuss. So there's 108 of you guys. hanging in the stream. I certainly appreciate you guys allowing me to be a part of your afternoon. If you give me some support, if you're enjoying the stream so far, then hit that thumbs up. I certainly would appreciate it. And if you're not subscribed already, maybe you might want to consider doing so. I do this every day at 3:45 p.m. Eastern time. I go live from Monday through Thursday, and I cover headline news. I'll also cover the earnings as they're coming in and give my general thoughts as well. Also, FYI, at the end of the stream, I'll also be giving you my thoughts on whether or not your favorite stocks are overvalued or undervalued in a segment that I call the over-under. If you guys put over-under and your favorite ticker in the chat, it might just show up in today's stream, and I will determine whether or not your favorite stock is overvalued or undervalued. Make sure you're putting over, under, and your favorite ticker in the chat. I'll be happy to cover it as we get towards the end of the stream. All right, so today we got Take-Two Interactive. Estimated earnings per share is $1.04, $882.1 million in revenue is the expectation there. Very interesting to see how this is going to shake out. We had EA Sports, or EA Electronic Arts. I always say EA Sports because that's just what you go to, but it's Electronic Arts. Came in and kind of disappointed on earnings and really kind of disappointed on guidance, but the stock actually went up still, which is interesting. It's actually outperforming the S&P right now. It's outperforming the market. Take-Two Interactive, a whole different ball game here, and I'll bring up the chart on Take-Two. And I'd be curious to see if this has a similar reaction. Right now, it closed up on the day, just barely in the green. I'll share my screen with you guys. This is a 5-minute chart on Take-Two. As those earnings come in, I'm sure we'll see some action here in after hours trading. So keep your eye on that. But this I thought was very interesting. You look at some of the stats here, and it is kind of makes me wonder where the stock is actually going. I mean, could it be that it's just gotten beaten up so bad that it's one of those situations, and I've talked about this recently, that it's so bad it's good? This was trading at $214 a share really not that long ago. This is your daily chart. You can kind of see how this has really been just absolutely beaten up. And so could we see it be one of those situations where people are expecting, or investors are expecting, such a dramatic slowing of growth that this is getting so bad that it's good, and they could come out with earnings that are bad, but maybe not as bad as people thought they could be. So, and I think that's probably what happened with EA Sports. I keep saying EA Sports, Electronic Arts. If you look at Electronic Arts, the same type of situation. I think that it was more along the lines of it's so bad it's good, and I think that maybe we could see something along the lines of Take-Two as well. Then we have Tencent. These Chinese stocks have gotten absolutely murdered. This is another one where you look at the daily chart, and it has just been a huge fall from grace. This is trading at $4. This was all the way up to 32. And this was, back when Alibaba, all of them were all doing extremely well. And this has just continued to get beaten down because of regulation revolving around China. If you guys don't know anything about Tencent, it's an entertainment business. They're basically a streaming platform for the Chinese culture. They've seen some pretty decent increases in activity, about 26% year over year in growth. And so that's listening volume, I should say, not just revenue. I should clarify that. So actual growth and actual use is increasing 26% year over year since 2020. So I don't know. We'll see where this goes. I think that this is also a situation in which it's just gotten so bad. There's only one direction that this probably can go, but we'll see. I don't know when they'll actually release those earnings, but if they do come live, it's the thing with a lot of these Chinese companies. Neo, it releases their earnings way late. Baba kind of does as well, but we'll see. We'll see what they do, and those are your numbers on Tencent. The estimated earnings per share on that is 7 cents per share, and then revenue is supposed to come in at 1.23 billion. Then you have Sundial, and this has been a very interesting mover today. As I'd mentioned before, it was up around 23%. Let's see where it closed at. Sundial closed the day up 21, so it gave back a little bit of its gains. It had a high of the high of the day was around 48 cents, sitting at 46.5 right now. It's had a monster move. Here's your daily chart here. It went all the way down to 34 cents at the bottom just last week on the 12th, and obviously had another monster day today. Also moved on Friday as well. It moved on Friday, I think, because of what we saw from Aurora Cannabis. If you guys didn't catch that live stream, we reacted to those Aurora Cannabis earnings, and the stock actually moved pretty well. They beat on sales expectations, but the miss on earnings per share was absolutely atrocious. All of these companies, and Sundial included, has a ridiculous amount of debt. And I mean ridiculous. Let's look at Sundial here real quick. And I just want to show you the chart, and we'll get back to some of these other earnings. So this is convertible debt, and this isn't all of the convertible debt they have. This is just a line of convertible debt they have on their balance sheet. $113 million in convertible debt. If you're unfamiliar with what convertible debt actually is, it is shares that you can convert, or cash that you can convert into shares. So these companies like Sundial and Aurora Cannabis, because they are not supported by the federal government, it's really difficult for them to get loans that are backed by the government. And it's impossible unless you are able to do something on the state level. And none of that really pans out for them. They don't have that kind of money usually. So they're forced to raise cash by going through lenders in the form and raising capital in the form of shares. So that, let's just say, for example, I myself am the CEO of Sundial. I need to raise capital in order to be able to continue operations. I don't have the revenue necessarily yet to support that. Revenue for Sundial is around 22 billion or 22 million. Sorry, 22 billion. That would be crazy. 22 million per quarter. That's what the expectation is here. $22.72 million for the first quarter. Let's go back to the chart here. So with $113 million though in convertible debt, that means that they have their lenders have the ability to sell that stock. And most of the time that stock is at fractions of a penny. With Sundial trading at 46 cents, I'd imagine, and I have to do a little bit more digging on this, I'd imagine it's probably either 0.001 cent per share, or maybe it's 1 penny per share. Most of the time it's about fractions. So there's so much debt here, and they have to convert that by a certain date. It has to all be converted by a certain set date based off of whatever the conditions of the loan is. And this is what happens. The stock went all the way up to what, $3? So, look at this. I have to go all the way up here. All right, let me redo this. Stock was at $13 and then obviously continued to convert. And this is called dilution, if you guys aren't familiar. Had a nice little spike back in the beginning of last year to 396 and has been diluting ever since. And we look at Aurora Cannabis and it does the same thing. They continue to dilute like this, and then they reverse split because they need to stay on the NASDAQ, and it's been trading below $1. And I think that Sundial is actually in danger of this as well. So there's a high likelihood that I think Sundial could actually come up with a reverse split very soon. If they're trading under $1, they have a certain amount of time that they need to get back up over $1 or face delisting. And one of the big ways that you can take care of that small little issue is to go through and move forward with a reverse split. The reverse split is not good for the investor. It is not good for you at all. And then they really only do that to just continue to dilute the share right back down. And we've seen that with Aurora Cannabis and a lot of these other ones. Biotechnology companies, don't get me started. They all do the same thing as well. And, sometimes they have to. If you don't have revenue, especially biotech, you got to raise money somehow. And it's usually with the promise that they're going to come out with a decent product afterwards. We'll see. Sundial is projected. There is actually no analyst projections on this as far as earnings per share are concerned, so I can't give you that. But the expectation here is around 22 and some change $million per or in revenue for the quarter that they're going to be reporting on. So for the first quarter. All right. So there's Sundial. I know I went on a little bit of a tangent on that, but I really wanted to make it clear for you guys. So it's about 176 of you guys watching here live to react to these earnings. Let's go ahead and check back on take two. Oops. Take two is trading down. It looks like those earnings may have come out. There's a huge spike here down to $100 a share after closing the day at 110. And now it's starting to try to go back green. It's flat right now. Let me see if I can pull those earnings up for you. Looks like those earnings should be out. There we go. So revenue came in at 930 million versus the 873 million that was expected. So pretty solid beat on revenue, if I do say so myself. I mean, that is a very solid beat. They beat by 28 $58 million. They beat by that much. Wow. So they beat by 58 million bucks. Estimated earnings per share were $1.06. They actually missed on actual at 95 cents per share. So a beat on revenue, a miss on earnings per share. Kind of been the theme with all of these companies, not just Take-Two, but all of them. So Take-Two right now is actually back in the green, now up around 1% after hours on those earnings. Sometimes when you get mixed results like this, what really matters, and what really matters no matter what here, is that guidance, that all important guidance. So we're going to have to see those guidance numbers as they come in. And as soon as I get those, I'll certainly share them with you as well. But those are the preliminary numbers on Take-Two. Again, estimated earnings per share was $1.06. They came in and missed on that at 95 cents per share actual. The revenue came in at $930 million, a very strong beat on revenue, I got to say. I mean, that's pretty strong versus the $873 million that was expected. So they beat by 58 million bucks. Pretty strong there on a revenue beat for the first quarter for Take-Two. If you guys aren't familiar with Take-Two, the company, video game maker, I guess I should have led with that. I mean, as I was talking about Electronic Arts, but some familiar names. One of the most notable ones is Grand Theft Auto. They also do a lot of 2K sports type of stuff. But those are your numbers there. Stock's actually continuing to move up here now. It's up about 1.5%, almost 2% here after hours. Closing the day green. I like this. Bodie Beer says hit the damn like button. If you guys wouldn't mind hitting that like button, I certainly would appreciate it. There's about 60 likes in here with about 200 of you guys watching. So I appreciate you allow me to be a part of your afternoon. All right. So here we go. Looking at Take-Two. There's your numbers there. Just checking in on the chat. And you guys are chatting away. I appreciate it. If you know music, you know music, says Oliver Thorpe. Yeah. Okay, so getting on to Tencent. Let's see if there's anything out for them. Looks like there might be. Let's pull up the potential earnings numbers for Tencent. Ticker symbol there is TME. All right. Nothing on them just yet. Oh, I take that back. So it looks like those earnings are out. So Tencent came out and earnings per share of 9 cents. They beat the what was that, 3 cents? Is that what I told you guys earlier? No, sorry, 7 cents was the estimate. They came in at 9, so beat on earnings per share. Revenue is 1.05 billion. They beat by 69.96. The expectation there was 1.23. Is that right? 1.23 billion, I feel like, was the actual estimated. Let me double check this. Tencent actually tweeted this out, so must be right. So it looks like they beat on earnings per share, and they also beat on revenue. Some interesting tidbits information here. Tencent reported net profit of 102 million, so pretty decent there, and 7.6% increase on sequential basis. Their revenue from music subscriptions increased 17.8% year over year. Another positive move in the right direction for Tencent. Online music paying users increased 31.7% year over year to reach 80.2 million on a sequential basis. The number of online music paying users grew by 4 million. Paying ratio was 13.3% up from 12.4% and 9.9 in Q4 and Q1 of 2021. So still growing despite the comps, some pretty decent comps from Q1 and Q4 of last year. So really decent beat for Tencent. Stock is just barely in the red. Here's the caveat to this. If you guys aren't familiar, obviously, the Chinese stocks have been absolutely crushed over the last year, Alibaba, JD, Pinduoduo, Tencent, all of them have been absolutely just crushing. We'll hear from JD, I believe, tomorrow. Um, and so, this is great. These are all great numbers, and we've seen some fantastic numbers from all of these companies. The problem has been Chinese regulation. If China can let up on some of these, then I think that we could see some huge pops on this. With Tencent coming in with numbers like that, and if we start to hear some sort of easing of regulation from the Chinese government, then I think Tencent could be a massive mover, along with a lot of the other ones, Alibaba, JD, Pinduoduo, and so many other ones. Neo is even in that conversation. So those are your numbers for Tencent. If you guys are tuning in a little bit later, Take-Two came out and beat on revenue, but also missed on earnings per share. Kind of been the theme, right? It's characteristic, not surprising to see in an inflationary environment that revenue comes in higher than expected, because a lot of these companies are able to pass on increased costs to the consumer. But the problem has been, and it just continues to be a theme, when you're competing with wages and higher costs in general with overhead, then you're going to end up missing on earnings per share as well. But nevertheless, Take-Two came in and had some pretty decent growth as well. They came in profitable, which is always what you want to see. And stock's up 3%. So the growth here could certainly be a positive for them. Let me just see if I can find some guidance numbers for Take-Two. So looks like they did increase their guidance. They're fully prepared to acquire Zynga. If you guys aren't familiar, they did strike a deal with Zynga to acquire them. So forecast for Take-Two, they see adjusted revenue to 3.75 billion to 3.85 billion. The estimate was 4.8. So they raised their guidance a little bit, but missed on the estimate. They see adjusted earnings per share $4.20 to $4.40, and the estimate there is $5.99 as well. First quarter forecast, they see adjusted revenue of 700 million to 750. The estimate was 788. So another miss there. This is very interesting why the stock is going up. Usually you'd see it go just really sell off here. They see adjusted 60 to 70 cent in earnings per share, estimate of 96 cents. So they missed there. Adjusted revenue, 845 million year over year, 7.8% increase on guidance there. And then 870.1 was the estimate. This is interesting. And I wonder if this has a lot to do with, remember I was talking at the top of the show, I wonder if this has a lot to do with the fact that while those numbers weren't great and they came in below expectations, you have to wonder, you hear this all the time, what was the whisper numbers? What were people actually thinking, even though there was these analyst estimates? And I think that maybe this is just one of those cases where it's just so bad that now it's good. These numbers came in and they weren't below expectations, but maybe they weren't as bad as what maybe some people were expecting. And so that's why we're seeing them move up. You got me right now. So far, those numbers weren't fantastic, other than revenue coming in higher than expected. But missing on guidance, missing on earnings per share, and the only thing they came in higher than was revenue. I mean, that was it. Looking at the stock though right now, 101.85 was the absolute bottom that we've seen on this, and it had a pretty decent turnaround. So maybe this continues. Obviously, we'll see what they say on their earnings call. That's usually, I think it's coming up around 5:30. But those are your numbers for Take-Two. And I mean, this is very interesting to see the move on Take-Two, even though they beat on revenue, but kind of missed on everything else. They missed on guidance, missed on earnings per share, and those are your numbers. And the stock's moving up. I guess you should be happy about that. Hopefully it continues. Okay. So there is Take-Two. If you guys missed the numbers on Tencent, they came in and actually smashed earnings. I take that back. They didn't smash earnings, but they did good. They beat on earnings per share. They beat on revenue, and this stock is now down. Maybe it's guidance. Maybe it's not what people were expecting, but there's interesting move down on Tencent. This is down 1.5%, so it's not a big deal. whether or not you want to be in on Tencent or one of the other Chinese stocks, that's entirely up to you. But I think that there's obviously that inherent risk with the Chinese government continuing to loom here. But those numbers were absolutely fantastic. I mean, a lot of these big companies that are publicly traded that are Chinese based, I think are all amazing companies. And it's unfortunate that they've just kind of been thrown through the ringer because of the Chinese government. If these were public, if these were US, if Tencent was a US based company, the stock would be absolutely insane. It would go nuts. That goes for Baba and a lot of the other ones too. All right. Lastly, Sundial. I don't know if those numbers are actually in yet, but the stock looks like it might be. The stock is down 4.5%. Let's take a look at that. This isn't too much of a surprise. I wonder if this was more along the lines of buying the rumor and selling the news. You see a stock that goes up 20 some percent, and that's bound to happen. I'll see if I can find some numbers here, but there was no expectations on earnings per share. The company is still so small. You don't really get that. Let's see here. I don't have. Here's their filing, it looks like. Gosh, these 6Ks are so hard to read. You give me a regular 8K, what have you. Okay, fine. But I got nothing yet on actual numbers for Sundial. These tiny little companies are always difficult. I got nothing there either. All right. As we get into the end here, so make sure you guys are putting your over unders. We're going to be getting to the over under segment here. So if you want to know if I think that your favorite stock is overvalued or undervalued, make sure you're putting over under and your favorite ticker in the chat. Would love to review your favorite ticker and go over it with everybody in the stream. So over under and your favorite ticker, put it in the chat. Would love to evaluate that myself and give my opinion on your guys' favorite stocks. So just kind of look in and check in on Sundial, and it looks like they released a 6K, but there's nothing on it. I don't really have much to give you just yet. Looks like those numbers are out, but I have nothing attached to the 6K. It's very strange. With these tiny little companies, it's very, very strange. All I wanted to see really was the revenue number. You know, was it over that 22 million? What have you? But I don't have much to give you. Yep, nothing yet. If it's noteworthy, and maybe it'll come in before the stream's over. If it's noteworthy tomorrow, though, maybe I'll cover it for you guys tomorrow. But right now, the stock's trading down 5%. I would imagine that maybe those numbers are kind of disappointing. We'll see. We'll see. If you guys are just tuning in, though, with the 200 of you guys that are watching, we did cover those Take-Two earnings. And stock's still up 2.25%. Earnings were mixed on expectations. They came in and beat on revenue by about $58 million, missed on earnings per share. They're expected to come in just over $1, and then actually came in below $1 per share, around 97 cents per share. Stock's up, though, and honestly, the guidance actually came in below early expectations as well, yet the stock is still up. Can't really give you too much of an explanation as to why. My thoughts are is that, you know, as I mentioned earlier, that perhaps this was just like a this is so bad it's good type of news, but we'll see. And then also Tencent came out and beat earnings across the board. They came in and beat expectations on earnings per share. They also beat expectations on revenue, and everything seemed to be pretty good there. The stock is down, though, around 1.2%, so not too crazy on that. Okay, let's do it. Let's do the over-under, guys. So if you are familiar with this, then you know what to do. If you're not, make sure you're putting in the chat over-under and your favorite ticker. So this is the over-under, overvalued, undervalued segment where I will go over some of the viewers' tickers, their favorite stocks, and determine whether or not I think they're overvalued or undervalued. If you guys want to be a part of that, make sure you're putting in the chat, and let's go ahead and get into it. So my first one, over under on Tattooed Chef. It's overvalued. It's overvalued all the way to zero. ADN over under on ADN. All right, let's check out ADN here. Let's go to the daily chart. Of course, it's a penny stock. It looks like it never used to be a penny stock. Hold on. Let me bring this back out to the daily. Man, this got absolutely torched. These are the stocks that I don't like. Ones that just continue to go down. If you guys, Advent Technologies is the ticker. Let me see here. So they are involved in advanced materials and technology development company. They operate in the fuel cell and hydrogen technology markets. Listen, man, I would say that even though the stock's been beaten down, I'm not going to sit here and tell you that it's undervalued yet. These types of companies, the business that they're in is highly competitive, and we have no idea whether or not they're going to actually go anywhere just yet. It looks as if they had a decent pop here back in the beginning of April, and it's done nothing but fizzle out ever since. I would say I'm not going to tell you that it's overvalued or undervalued. I just wouldn't be either. I think I just would stay away from it in general if I were you. CrowdStrike, overvalued or undervalued? Very interesting topic of discussion that I had with our Chaos crew, our level 3 peeps this morning on cybersecurity. We have Palo Alto that's going to be reporting earnings on Thursday, which I'll be reacting to Thursday afternoon at 3:45 p.m. Eastern time. So make sure you're subscribed, hit that notification bell to get notified when I do go live and react to those earnings for Palo Alto. But Palo Alto has a pretty high multiple. It's at 60 times next year's earnings, and CrowdStrike is over double that. You look at the PE right now, forward PE is at 133 times next year's earnings. Probably would be a no-brainer to the naked eye as far as what this should be, overvalued or undervalued. And in normal circumstances, if this was Apple, for example, or Microsoft, and it was trading at 133 times next year's earnings, I would say, yeah, it's extremely overvalued. The growth there isn't going to be anywhere near what it should be for something that has a high multiple like this. But CrowdStrike and Palo Alto and Okta and a lot of the other cybersecurity stocks and companies have tremendous growth potential, and especially in this environment that we're seeing right now. Does CrowdStrike deserve to be all the way up at $300 a share? I don't think I could really make that argument. But what I will say is that we are in a point right now with Russia, Ukraine, and the geopolitical climate right now that I think that demand from the U.S. government, from other smaller companies, and is just absolutely insane. And I think the growth potential for CrowdStrike is still extraordinary, given the fact that this came all the way down from $242 a share just in April down to $130, and we're starting to see this bounce. Rob T, CrowdStrike is undervalued. I think that we do see this go back up. I'm not saying it's going back to $300 anytime soon, but I could easily see this getting back to $200 to $225 with this trading at $146.39. Watch those Palo Alto numbers come out and absolutely crush, and then CrowdStrike reacts as a result. Trade Desk, very interesting one I see here from Johnny Tran. Trade Desk over under. So Trade Desk just had their earnings, and they actually did pretty well, and it's had a pretty decent reaction since. This is one that I think still needs to start to break this trend. It's been downtrending ever since $114, and really, I don't know if they necessarily shot themselves in the foot when they did a reverse split here or a forward split, but it certainly hasn't like done well for the company. The stock hasn't been performing just because they ended up going through a split. Surprise, surprise. You can see this is nothing but higher or lower highs and lower lows, still continuing to downtrend. Maybe we see this actually switch gears here a little bit off the heels of these earnings. Forward PE is at 52 times next year's earnings, which is still extremely high, but they are a growth company and they are profitable. So I think that there's definitely some opportunity here. Is it overvalued or undervalued? I think it's undervalued at this point. And I think that once we start to get this back up over this trend, maybe it starts to make a move over that 50-day moving average at around $62 per share. then this could really start to make a move. I say it's undervalued right now. The risk reward here is actually good, even though it's trading at 52 times. The growth potential is really what I'm focused on there. It's a high multiple, has the ability to go back down, but I think I like it regardless. Um, Melanie Hutchinson, Target over under. Ooh, I like this one. So Target has earnings this week, pre-market before on Wednesday. So before the market opens, we'll get Target's numbers. Tomorrow, we'll get Walmart's numbers as well. If you guys were tuning in to Stock Watch Sunday last night, I went over those. So make sure you're going back and watch that to get my thoughts on what we should be expecting from Walmart and Target. But you look at Target here, and it hasn't really been performing. It's been lagging very much so compared to something like Walmart. Let's take a look at Walmart here real quick. Which, by the way, Walmart is trading at 22 times next year's earnings. That's obviously had a significant pullback, but they hit all-time highs just at the end of April. Target isn't anywhere near that and didn't even try sniffing all-time highs at 268.98 that we saw back in November of last year. You look at something like a Costco as well. Costco is trading, obviously had a significant pullback as well, but it's still trading at 37 times next year's earnings. So pretty expensive stocks. Target is trading at 15 times next year's earnings. It's trading below the 50-day moving average. They had incredible earnings the last quarter, and I would expect them to do really well this quarter as well. Maybe not have the same type of growth, but I think that they will still do better than Walmart and Costco on the growth side nevertheless. Melanie, this is undervalued. Watch for this to make the move over 224, which is the 50-day moving average. It might be met very swiftly by the $234 a share, which is the 200-day moving average. And I like this one a lot. I think it's undervalued, especially compared to some of the other big box stores as well. Over under on SoFi. We've talked about this one, so I'm not going to go over it, but we talked about it twice last week. SoFi is still undervalued, even with the move. I understand why you're asking, but I still think that it's undervalued. I think it's undervalued under 10, and maybe even beyond that. So very interesting here too. Shopify. I don't know if we've done an over under on Shopify yet. Maybe we have. If I'm repeating myself, I apologize. This is trading at 338 times next year's earnings after already falling from $1,762 a share to $360. It's still trading at a ridiculous multiple. Sometimes you can justify these moves with that type of multiple based off of the environment that we're seeing. Is the growth there to justify that type of multiple? And in my opinion, Shopify does not fit that bill. They are a growth stock and they are growing tremendously. But in an environment that we're seeing, we just heard from their earnings. We heard from Amazon's and many of the other, and Etsy, many of the other e-commerce platforms are experiencing a slowing in growth. And until we can get further away from those 2020 and 2021 comps, I think that Shopify is going to continue to be in the doghouse. Yes, they are profitable. And yes, they are an incredible company. This is a great long-term trade. But in the here and now, Shopify is overvalued. Over under on Expedia. I like this one too. What's wrong with travel companies in the last couple of weeks? That's a great question. So it looks as if we've seen a little bit of a slowdown on some of the travel related stocks. Expedia has taken an absolute move down. I mean, a huge move down. And this has a lot to do with inflation. These inflation numbers came in, and there's a lot of investors that are worried about demand destruction. I still don't buy that. And maybe I'm wrong here. And I would be willing to own this on if this comes true. If we see a significant slowdown in travel, which again, I do not think that we're going to see that this year, then Expedia deserves to be down here. But I don't think it does. And I think that travel is still going to be an absolute monster over the summer, despite higher gas prices and what have you. So Expedia is undervalued. I think it deserves to be bought up here. And that goes for Airbnb, that goes for Booking, and the airlines as well. They've all gotten beaten up, and I think that this is a good opportunity to get on those. I think, in my opinion, they're undervalued. Okay. Going in on a couple other ones here. Ooh, I like this one. Japonica, Lockheed Martin. Let's take a look at Lockheed. And this is an interesting one. This is trading at 16 times next year's earnings. So actually cheaper than the S&P 500 right now, which is around 18 times. And it's obviously had a tremendous move. I would say that this is still undervalued. As long as we're seeing things advance and increase in or increase tensions rise in Russia, Ukraine, and some have made the argument that things have settled down. They have not. Uh, I would venture to say that Russia and Vladimir Putin are in kind of desperation mode. They know they're not doing as well as they should be, and so I almost wonder if I'm not going to try to put anything past this guy. I did at the beginning of the year. I didn't think he was actually going to go through with it. And now that he's in the thick of it, I don't think that he's going to back away at this point. So looking at this, I like this. I think it's undervalued. This is a really nice trend here. We could be seeing a pretty decent wedge on Lockheed Martin. Look at that. I think it's bullish. We could see a really nice breakout here. It's undervalued. It goes higher from here by the end of the year. I like it. You see what I did there? Nice little rhyme going on. Okay, guys, that's going to do it for me. Thanks so much for tuning in. If you missed the beginning of the show, we covered those earnings on Tencent and Take-Two, and we tried to cover Sundial. Didn't really get those clear numbers, but if we do get those in after I sign off and they're worth sharing tomorrow, I'll certainly do that with you guys. But if you want to be back tomorrow's we got other earnings that we're going to be reacting to as well. Hopefully you guys will tune in. Make sure you're hitting that subscribe button and that notification bell to get notified when I do go live at 3:45 p.m. Eastern time. And tomorrow, so pre-market, there's Target, Lowe's, TJX. I'll react to those and give you my thoughts on those. But we got some pretty decent ones as well. After hours, there's Cisco, which is going to be very important. I think that that's also going to do really well. I'm sorry. Let me take that back. I'm looking at Wednesdays. We'll be covering Cisco Wednesday afternoon. Walmart is pre-market tomorrow. Home Depot, OpenSea, JD.com, and among others will be pre-markets. I'll be reacting to those in the stream tomorrow at 3:45. Keysight Technologies, QuickLogic, NextGen, and a couple of other smaller ones we'll also be reacting to when those earnings come out tomorrow. Guys, thanks so much for tuning in. One last thing, if you want to become part of the Chaos Crew, hit the join button next to subscribe, or the link is in the chat as well. Each and every morning, I put out a list of 5 stocks that I think are worth taking a look at. I give a fundamental technical breakdown on each one of those. You guys are getting tremendous value for $4.99 a month. You can't beat it. Would love to have you guys support and your part in the Chaos Crew. So guys, go check those out. That's going to do it for me. I'll see you all tomorrow. Bye.